Brilliant. Thanks for joining. Good afternoon, everyone. We'll start our lesson 3. Today lesson will go through our LO3 learning outcome 3. As you know me, my name Anjum Sattar. Please, if you have any question, drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. This lesson will be focused on our LO3. Okay, so you can see the slides. We'll start then. Please always feel free and I'll always ask questions. I already send you the handouts. Those are available on our WhatsApp group as well. Please, you can download or you can download through Moodle. Okay, so today lesson is about be able to prepare the financial statement for the group of entities. I will send you the separate handouts for the question and answers just for the consolidated financial statement normally we use and to prepare. So that will be, and you can use for your assignment purposes as well, those questions, and you can embed examples in your writing. So let's please, always good to be reflect, how much we know about the consolidated financial statement and how many types of financial statement we prepare in account. So that will be in our discussion. And these in last two lessons, we do a bit recap, So this is our indicative contents about the group of companies, consolidated financial statement, and we'll go through the cash flow statement as well, please. Okay, so let's do a bit recap. So we discuss about international accounting standards. So we discuss IAS 1. We discuss about how to prepare financial statement. Thanks for joining. Good afternoon. And we discuss about IAS 2, which is about inventories. And inventory should be recorded at cost or net realizable value, whichever is the lower, and not, record the inventory on the higher value. We discuss about events, and if the financial statement signed off, and then of course it won't be adjustment in this accounting period, it should be adjusted in the next accounting period, but before signing it is adjusting event, any material information should reflect, because the financial statement need to be true and fair. We discuss about IS 16, which is about property plant equipment depreciation method, revaluation, fair value and fair value adjustment. We had a discussion. We discuss about IS 36 about the goodwill. We discuss about IS 37 contingent asset, and we discuss about IS 38, uh, revaluation and impairment asset and impairment test. So we already had a discussion about all these ISs. And this week, we're looking consolidated statement. So please, always good to be when we prepare the consolidated financial statement, we need to, okay, should be shared the lecture recording, but I will share it with you at the end of the lesson. So I'll drop the links, on our WhatsApp group so you can access, all the previous recording. Okay, so please, during last lesson, we also discussed about ethics, we discussed about financial statement, and we discussed about qualities or qualitative characteristic about financial state. Okay, so this week, please, always when we preparing the group statement, group account, so we need to be think about subsidiary, and we have to think about associate, and we have to think about parent. So parent company is the company if own and control. If you own 50% or more shares of other company, that company will be your associate. If you own 20 to 49% of the shares of other companies, that will be your associate company. Okay, so if you own between less than 20% of the shares of other companies, that will be your simple investment. So we're not really including, with just say investment in other company instead of consolidated there, the asset, liabilities and control. So that's really key difference when you're preparing. Okay, always please we need to be make sure intra companies, any business we do intra company like company A, company B, but the A is the parent and B is the subsidiary. So intra company profit we need to be eliminated because that's between the group when you're preparing the group statement. Of course individual is fine, but when we preparing, so that's which we need to be keep in mind, which we'll go through and I'll share with you. Okay, we already had a discussion about in the previous lesson IAS 7 International Accounting Standard 7, which is about the preparing the financial statement, which is the cash flow statement. So we can prepare the cash flow statement and we have three types of activities under the cash flow statement. Either you use direct, indirect method. So operating activity, which is a normal business, such in case of Tesco, they are normal business selling the consumer goods. But if they have the spare cash, they can invest in the properties or invest in any other company. That will come under the investing activities. And the chain in the non-current asset, that is also investing activity. Then we have the financing activity. Maybe we can borrow money through issuing share or borrow money through the bank loan. That will be the financing activity. So cash can be in and out through under these activities, and we can calculate the changes happen. So please, under IES 7 International Accounting Standard 7, please, which is about the financial statement, and then we're looking the cash flow statement under 7. So profit before tax we always add, then we make adjustment finance costs. Please always under the operating activities, we add it back. Depreciation is a non-cash expense. Dividend received is come under the investing activity, not operating activities. So we need to be first place, maybe when you prepare the profit and loss, you include it as a profit, but we need to remove it here. The gain on the disposal of asset is come under the investing activity, not under the operating activities. Increase and decrease inventories, we need to make adjustment there. Trade receivable previous year and current years, we need to make adjustment there. And increase in decrease in the trade payable, that's under all these are operating activities which is happening throughout the years. And the cash generated from the operation, interest paid during the years, that's which we minus the tax paid during under. So that's the net cash from operating activity. Then please we can go back. Any question from anyone? If you like to ask, please you can. Okay, then please net cash from operating activities, that's your there. Then you go investing activities, purchase asset, plant and equipment from the last year, this year, what changes happen in the non-current asset. If you sold any proceed of the non-current assets, so the cash increase. And the interest received if you invest money in other companies, the last year, this year's figures you can look around. Dividend received, so that's the, and then you add them all, is either increase or decrease the cash under the investing activity. Then you have the financing, if you issue more shares, so cash inflow. If you buy back shares, the cash is reduced balance. So increase in the bank loan, it's also increase the cash flow. And the dividend paid, if your liability decreased, non-current liability, then it's mean the cash went out from the business, so we need to make adjustment accordingly. So we can look around the net cash under the financing, and then you overall, maybe you have operating activity positive, investing maybe you have negative, or finance you have a negative. Overall, what the net cash flow, you have the opening cash balance at the start of the year, add them, and then the net cash balance, which is normally given in the balance sheet. So please you can look around, it means it's a reconciliation, and the cash flow statement we can prepare. So all explanation of the thing, what key points we need to be look around, and that's which we can explain when we go through our assessment criteria 3.1. You can add the example. I'll show you the example where you can find advantages and limitation of the cash flow. Of course, if it's quite good, it's help you, and we can look around the problem. Sometimes cash can be manipulated as well, so we need to be make sure we follow. So please, I shared with you the handout, which is Osborne handout, and 3.6, 6.3 and 6.4 is the question. Please you can do from the handout. So you've been given the question, you've been given the answer. So the student handbook, which is chapter activities, please, that's your question, and then you have the answers booklet. That's the answers, and we can pick the question we can include in our assignment for 3.1. But we'll do the discussion assignment discussion, and I'll show you all the question and answers, and we'll answer those questions in our assignment discussion. Anyone, any question, please? Okay, then please we have IFRS 10, International Financial Reporting Standard 10, parent, subsidiaries, and associate, which we mentioned earlier, and thus we need to be explained, which we can discuss about what is meant by parent and subsidiary. Control, of course, their assets and liabilities, and we have the parent have the control on the subsidiaries, intra-companies voting rights, and the shares, their values we need to be look around. We need to calculate the goodwill. Okay, goodwill is the key elements, please. So we can first think about the group structure. How many percent parent is owned by the subsidiary? So if you own 60% share, so we can say the parent owns 60% to subsidiaries. Then we can calculate the non-controlling interest, which we don't have an interest as the parent. And we can think about the date of acquisition and the date of, so how much is the fair value between net asset values went up. So we can look around those, please. These are the key points which we need to calculate. And the goodwill, because this is not exam based, so we can add the example, we can explain little bit, that will meet the criteria. Okay, so that's the key, which we need to be. Goodwill, of course, consideration, how much we are paying to purchase, how much was the controlling interest which we have in the net asset value at the date of acquisition. So what we are paying, the net value of the asset. What is the net asset? The accounting equation, assets minus liability equal to net asset, and net asset figures always equal to equity figures. So please, if we have the impairment goods in the question will be given, that means the asset of values. So we need to be think about the goodwill values. So we can look around how much we are paying, how much was the net asset value. After that, that will be the money we pay towards goodwill. Let's say 100,000 is the net asset, but you paying 120. So why you paying 20 extra? That you paying towards the goodwill. So which is the goodwill value we can calculate as well. Calculate the consolidated. So always parent and subsidiaries, please, their return earning, the profit for the years and the previous years, we can add them together at the date of acquisition. How much was the value, and group shares, 80% of post acquisition figures. We have only concern, not pre-acquisition. So we don't have a concern with the pre-acquisition. So we do the impairment of the goods, we minus, because the impairment we reduce the value of the return earning, because it's a loss in technical. So we can think about the calculate the non-controlling interest, which we can using this formula we can calculate, which we don't have, and that's which we show. Okay, so please the group. Then step 6, you look around the parent and subsidiaries, add them their figures together, non-current asset figures, any intra-company trading in under the current asset, because the receivable and the payables we can minus there, and that's intra-company, and then parent and subsidiary. Okay, please always the equity figures only parent return earning post acquisition, which we calculated as the step in the previously I just shown you. So these figures, when you a balance sheet mean balance, your debit and credit side should be equal, then it's fine, if anything, because we're not doing exam, we just adding the example to meet the criteria. So that's which we can look around some questions, and we can add these to meet the criteria. So please, that's parent, subsidiaries, associate, intra-company sales we need to be eliminate, which we earlier discussed, mentioned the profit, and for the point these. So please, you've been given in the handout, consolidated handout, I will show you at the end as well, 8.4, 8.5, which is chapter 8 of the book, which is Osborne handouts. Please, chapter activity, you have the Kaplan, which I shared with you, which is available on the WhatsApp group I shared with you today. So please, you can look around these questions, and the chapter activities answers. So answers available, you can copy and paste it as snippet, and underneath you can explain, and then that will meet the criteria of 3.2. Okay, then please 3.3, prepare the group statement that involve changing in the group structures, which is carry on happening, new subsidiaries, a new adjustment, intra-company trading, And when you're making these adjustments, that's impact which we can show the basic principle, we can explain intra-company trading, we can look around revaluation of the asset, depreciation, that's we need to be adjustment in the book of account. So please, the question 8.6 in the handout, that will meet our criteria, which we'll look in a minute. And if you want to do the merit criteria to working towards merit criteria accounting requirement related to the foreign transaction, so please we need to be convert them, of course the value of the asset we need to be make sure, because we are using international accounting standard is a harmonized system like revenue we call, yeah, under IAS 1, and the revenue will be in everywhere in when we consolidate it, and we need to be convert them, because sometimes currency elements can be legal structure between group and subsidiaries, which we can is example IFRS, which we can include and we can explain. So please, we included a Kahoot there if you want to play the quiz to test. If you want to work toward the distension criteria, prepare the detailed financial statement when the changes in. So if you're doing some adjustments like the working showing, that will like a fair value adjustment, goodwill, steps, intra-company trading, the gain and the losses and the liabilities, the revalue of the inventory. So please, the adjustment will meet the criteria of the merit. And I included the links for you here, please. And that's, the article of ACCA that also help us, when we do the assignment. Let's, quickly I'll show you the handouts where we can pick, the example of the question, and those we can meet the criteria, and we can look around in a minute, and I'll share with you and we'll demonstrate. Okay, yes, in lecture, each lecture is one LO. We discuss, so each lesson you can review. If you're when you will do the assignment, we look LO1, so it means lesson 1 lecture slide, LO2 lesson 2, LO3 lesson 3, and we can do the question. Yes, I will share with you the slides as well if you want, so no problem, which is available on Moodle page, but I'll share with you on our WhatsApp group, and I'm sharing with you at the moment. If you want in a minute, I can share with you. So I shared with you on the chat app, this, please, you can find there, plus I will share with you later on through our WhatsApp group as well. So you have LO1, LO2, LO3. These are there in the chat box. Okay, so please, we have 6.3, which I mentioned you. So scroll down, go into chapters, look around chapter 6 and 6.3 for your cash flow. Yeah, so please, this is our answers for 6.3a, 6.3. So if you go to the question booklet and look 6.3, okay, so please, this is the cash flow. You've been asked, to prepare the cash flows, and thus you've been given the question, and we have the adjustment, and that's your balance sheet, profit and loss, and with the adjustment, and you're preparing the reconciliation operating activities, you're preparing cash flow full, and you're looking, if you want to statement of change in equity, that's there as well. So you looked at the first one, we start with profit before tax, we went through the depreciation, all the key points that the template included in our um, lecture slides. So please, then we done the B, we did the operating, investing, and financing activities. When you're doing this, that meet the criteria of 3.1. So when we'll do, I'll give you plenty of questions, whichever example you want to, little bit if you want to change the figures, you can, as you want. Okay, so that's our 3.1. Then we discuss about 3.2, and we said, in 3.2, you look the chapter 8 of the book, for the consolidated example. So 8.4, 8.5 for this. So I'll take you back to 8.4, 8.5. So please you look around 8.4. So go chapter 8. So that's chapter 7 of the booklet, which is about the ratios. We have the question we discussed in the previous lesson under 2.3. So if you look to chapter 8, 8.3, please. So go scroll down. This is about the consolidated 3 point. So does your have 8.3? Does your working is a given? If you look 8.3 in the question booklet, so you've been given the question. So the template will help you to follow the steps, which we need to be look around. Okay. So please, 8.3 is the example that meet the criteria for 3.2. So please, you look there. So 8.3 you've been given, and sorry, 8.4 is a full question, full-fledged with a few extra adjustment information. Draw the consolidated statement profit and loss in that case and the subsidiary undertaking, and you've been given, and the answers you've been given in the answers booklet, because we combine both companies, their profit. Intracompany trading we eliminate, please, and then we had the balance sheet in intracompany 8.5. Please, if you want to pick the exemplar, I already sent you the handout, which is the Kaplan handout, and even 8.6, which is also parent subsidiaries and associate to meet the criteria. If you're doing with the adjustment sum, so that will meet the merit criteria. If you're doing intra-company trading, foreign elements as well are two subsidiaries that meet the even distinction criteria. So which we'll further go through in our assignment discussion. I'll give you the separate handout for the consolidated statements, with the question bank and the answers bank, and plus is available on our Moodle page, our open tuition, which we mentioned, F7 exam paper, or you can pick even example from ACCA exam paper. Those are, if you say ACCA old exam paper F7, you can download as well free online. Any question from anyone? So please, I shared with you as well in the chat box the slides, and I will share with you all the recording on WhatsApp group, and I'll share with you the question bank, just for the consolidated and the cash flow separately on the chat box as well. So please, we can look around some question if you want to. If specific you want me to go through any particular question, I can go through individually with you, but it's assignment based, so you can pick example, just a matter of writing and little explaining and adding the source of information. Okay, any question please before we summarize and finish? Yes, we had meeting and we discussed LO2. Sorry, I think so. Maybe you join a bit, so what I'll do, I'll send you the recording. So if we need to rebook between you and me, we can go through one-to-one as well. Any particular point. So I'll send you the recording. Okay. Yes, I'll share with you all the recording. So all previous recording is also available on Moodle page as well. If you are access on the Moodle, so please you can follow the Moodle. But this the which I'm delivering now. So I'll send you all the recording up to LO3 today. So I'll send you the link in the WhatsApp group. So just follow the WhatsApp group, please. Okay. So please, follow the Kaplan book handout. Look the Osborne handout, which I mentioned you in lesson 1. You can set up account on Open Tuition, which is LSBF, which is open to the public. That you can use as well. And other than that, we have a self-prepared handout. Some, the question banklet, which I'll share with you. You can pick, example. But we'll do the assignment discussion at that point. I'll go back to the LO1, LO2, LO3. I can say you can use these resources and how you can use them into, and I'll give you some sample assessment as well. Okay, that's all from my end. If no question, have a lovely weekend, and we'll go through next week our LO4 and we'll do assignment discussion. So next Saturday we'll go through our LO4 and the Sunday we'll do assignment discussion. Okay, thank you. Have a lovely weekend. Thank you. Bye-bye. Sure, I will send you all. Thank you.